Philippine Stock Exchange Composite Index hovers at its highest in nearly a month, the best in nearly 7 months. It's erased all of the decline since July 28 last year, when PBBM revealed the anomalous flood control projects in a State of the Nation address. So does this rally have legs? Well, with us to answer that question, April Tan, the Chief Equity Analyst for COL Financial and host of Intelligent Investing. Good seeing you again, April. Welcome back to the program.
Good morning, Kathy. Thank you for having me today.
All right, so should we be as optimistic?
I think there's room to be optimistic. The thing is, the major driver right now is, the Philippines' cheap valuation and the ongoing rotation of foreign investors into more traditional names, value names, just something that we really do have. So we are benefiting from that. Seems like we're also seeing some positive surprises as far as corporates are concerned based on the two companies that have come out with them. So far, so good.
So is there also room to be pessimistic?
Well, there is room to be pessimistic, but if you think about it, given how cheap the market is, looks like the negatives are priced in. So just to put things into context, right now, I think we're trading at 9 times PE. So during the global financial crisis, we bottomed at 8 times PE. So we're almost there. And, right now, notwithstanding all the negatives, okay, even with GDP just being at 3%, we're still growing. So maybe, people are just too pessimistic. They've sold everything so that if there's just a little bit of good news, people come back in. But if there's bad news, it's more like, well, I've already sold everything anyway, so it doesn't affect me.
There are many ways to slice and dice this, but maybe we could take it from the global versus local perspective. You have the view that it's global risks as the bigger mover of the markets, but why would you say so, given that we still have local risks of a slower growing economy because of the corruption scandal?
Yeah, because what's driving the market really right now is the foreign flows. We've actually had a net foreign inflow for the month of January. Actually, it started, I think, towards the end of December, and right now in January, we're still seeing funds going in. So this has been an ongoing trend since last year. If you look at the performance of the emerging markets through MSCI Emerging Market Index, they have actually outperformed the S&P 500 because there is an ongoing trend where, if you read about and hear about what people are talking about in the US, there are concerns about an AI bubble, expensive valuations of tech names. So what investors are doing there is that they are, I would say, diversifying or rotating away. They're reducing their exposure to the US. And what they're doing is they're relocating their funds to, other countries, such as, first they're looking at Asia in general, and those that would benefit, say, from the ongoing capex boom in AI. So it's benefiting a lot of the, say, semiconductor companies in Asia. And we also have
Exactly to
AI
your point,
names.
the AI boom. We're not even part of that ecosystem. So what makes them want to come here? What will be the major driver then?
Well, last year it was, say, going to the tech names and going to the semiconductors that power these AIs because they are being manufactured in Asia anyway. Like you have Taiwan Semiconductor and Samsung and all of that. But you see right now, okay, so last year MSCI Emerging Markets was up 30 something percent. So okay, they're not as cheap as they were. So you know how it is when the first movers become a little bit more expensive, then you spill over to the other cheaper place. Because if you think about the Philippines, yes, we're not part of that fast growing segment. We're not really a beneficiary. We do have our
Yeah.
semiconductor exporters, but they're not listed. But if you look at the grand scheme of things, our corporates are growing. They're just not growing in a brisk pace. They're growing single digit, mid to high single digit. So and they're trading at cheap valuations and they provide dividend yields. So, I mean, that's why they are now slowly, spilling over to the Philippines.
Okay, so where then can we get the biggest bang out of our buck if we do believe that it's a local equity place we have to invest in?
Yeah, I mean, well, as I've said, still have to be positive, stay invested in Philippines, but I think it's more of managed risk type of exposure. So, so for us, for example, we're still recommending having a little bit of defensiveness in the sense that buy local stocks are trading at good valuations, but make sure that they also pay you good cash dividends. Um, and I guess, to be aware of the bottom up story, like what's happening in companies. Like it's more of a stock pickers market. So pick good names, companies that have defensive earnings that are expected to grow on a faster pace this year. So in general, those are the themes that we see.
Final point, can you name some names ahead of the Banco Central decision on the 19th?
Well, for the defensive names, for example, we still like power companies like Aboitiz Power. We still like utility names like Maynilad. Um, for the other sectors, we like the big banks like BPI, Metro Bank, BDO. Even BDO, we like it. And then for consumer names, we like DNL. The telcos are starting to look interesting based on what Globe has disclosed so far. So we're quite excited to see how PLDT will also perform.
25, 50, or state's hand, what do you think is going to come up on the 19th?
Most likely 25. I mean, we'll see. It's quite interesting.
It will be. And that's what we're waiting for. Thank you so much for joining us. April Litan of COL Financial.